Hello, hello, and welcome to another day, day 5 of Walks and Talks, where a guy and his Fitbit march to their 10,000 steps goal as they entertain you with all sorts of information from everything from the markets to systems development to working from home. Today I wanted to talk about the stock market, okay? And the reason I wanted to talk about the stock market is because throughout the whole day until the closing hour, prices kept tumbling down. And the narrative today that the news media gave us was that the reason for this is essentially based on a company called Evergrande in China. Now, they might be grand, but many people have never heard of them. And so why would Evergrande impact us here in the US? Why would it impact any place else in the world other than in China? Technically, it wouldn't. So why is the news using that as a narrative? The reason is because it would be funny for the news to say, the stock markets were down this morning and we don't know why. That would be funny. Also, it would be funny if they said, and the markets were up, and they said, today, the stock markets are up. You have nothing to worry about, because you would just turn off the channel and move on. You wouldn't view them or check them out on social media. They wouldn't get their precious likes. They could not get any money from advertisers. Oh no. They would get money to get less money. So why is it that they kept pointing to China? Besides that, everything that I just said. Well, there's another reason, okay? The other reason is that they don't want to talk about things that could be potentially materially impacting us here and the world, mainly inflation, okay? Nobody wants to talk about that. That's something that may impact markets in a negative way, but they don't want to talk about that at this time. They want to find an easier scapegoat, okay? But let's talk about what really happened in the markets from a trader standpoint for just a moment. So the closing hour is a very important time in the markets. Why is that? Because that's where a lot of big players make a decision if they're going to go long or short and get ready for the next day. Okay, so they might decide to start buying, or they might start selling right around 12 o'clock Pacific Standard Time or 3 p.m. Eastern Time, all the way until the regular trading hours session close, which is 1 p.m. Pacific, 4 p.m. Eastern. So I have developed a system called Price Action Harvester, shameless plug, coming up, that essentially looks into historical price action and can give you data and statistics as to what happened in the past and what happens in history may repeat itself, right? So if you look at the last 12 Mondays, you would have seen that during the closing hour, price increased 66.67% of the time. You'll also notice, and my system does this, yet another shameless plug, that price on average when it increased by 57 ticks, okay? Now, if you take standard deviations of that number, you'll find that 3 standard deviations away from that mean, from that average of 57 ticks, is 48 handles. You'll note that from 12 p.m. until 1 p.m. or 3 p.m. until 4 p.m., price moved higher by 43 handles, from 42.05 until 42.45, okay? So what happened with price is something that, to an astute watcher of price action, could have been predicted. Now, the industry that I'm in, because I'm a commodity trading advisor, pays $39 billion a year on average for data. They're not doing this as a mistake, guys. This is a very well thought out thing, okay? They're not doing it because they just want to spend money. It's not a tax write-off, okay? They're doing it because it benefits them. They're not looking at RSI and making a decision, okay? Let me give you a quick story. When Trump was first elected, it was a shocker to everybody, including maybe even Trump. But he had a party, as you would if you became president of the United States. And at that party, everybody was having a great time, enjoying themselves. There was one individual, very, very wealthy individual, who saw that the markets are tumbling down hundreds of points. And he said, you know, I got to go. He went home, and on his little computer, he bought billions of dollars worth of SPOOs, or the E-mini S&P 500 futures. This man's name is Carl Icahn. You see, that's how wealthy individuals and hedge funds and other market participants make a decision not based on an indicator, whether it's VWAP, market profile, RSI, or a confluence of such indicators. They're making a decision based on what they're experiencing at the moment, okay? And the other part of this is when people go in and they look at the data and they say historically this is what happened. Just think why, okay? If you're a portfolio manager and I give you money to manage, you're going to charge me on average, this is what the industry charges, 2 and 20. What that means is you're going to charge me 2% for the management, for the total management fee. So if I give you $1 million, you're going to charge me 2% of that. And you're going to charge me 20% for your performance. So any money that you make me, 20% of that goes to you. Now, if you were to go long today and you made a mistake, if you were to go long today at 12 p.m., you would have not made a mistake because the price moved up significantly. But assuming you made a mistake, and I contacted you and I said, hey, why did you go long? Everybody was selling. You would say, well, based on the data, Rafi, I went long because that's what the data showed. We had a higher probability of price moving higher based on historical price action. And if I'm reasonable, I would say, okay, you had a sound plan. I'm gonna accept that. Do better next time. If I'm unreasonable, I'm gonna cancel my account. Okay. But if you made it, and if you were wrong on this, if you went long and you were wrong, again, you would have been right. But let's assume you were going to be wrong. And I called you and I was livid and I said, how could you lose my money like this? Everybody was going short. And you say, well, Rafi, you know, the RSI was below 30, Rafi. I would be even more livid at you, okay? Because I would say, so you made a decision based on RSI? This is what people who just started out trading do, okay? That's how you made your, I'm paying you 2 and 20 for what? So that you can do what people in retail, the people on the retail side are doing? I mean, I'm giving you that money because you have a certain, you know, set of whatever you're doing differently than retail. And that difference better be historical price action. Look, that's your foundation. It's not the only thing, obviously. It's more complicated than that, right? In my trading system, Price Action Harvester Automated, another shameless plug, there are many factors, but the foundation of everything is historical price action, because what happens in the past may happen again in the future. Very simple. That's why no creditor will give you a dime unless they check your credit history, okay? Because what you've done in the past, you are likely to do again in the future. If you paid on time most of the time, then you're very likely to pay on time most of the time again. Not always true, but it's true most of the time, and that's all they need to do. They just need to be right most of the time. In any case, this is all I wanted to talk to you about. I'm about 1,111 steps away from hitting my 10,000 steps goal for today. I've been hitting that every single day. So I'm proud of myself for doing it. And this motivates me. Hopefully this motivates you guys too, so that you do something to keep the heart rate up, to keep cardio going, and to, you know, keep exercise on the forefront of your mind, as I am doing with this mind. Anyway, take care, guys. Peace and God bless.